in 3 years, I'm gonna have more money from that than I get from my job. We don't want to be engineered into trading. Trading is the enemy for real investment returns. We want boring, simple, that's where the real money's made. So when I talk to my friends who are high income earners and I ask them, we talk about their investment strategy and they go, yeah, I just have it all in Vanguard. I'm like, these are the people who have serious money. So here it is, it's around 1999, 2000, everybody thinks they're a tech genius. You put money in any stock, it goes up 26% the next day. So what do? I take my college scholarship money and I put some of it in the stock market thinking, this is easy
Guaranteed
money.
20%.
Yeah, guarantee. And every day it's going up and down, but mostly up. Everybody believed they're a genius. So in a bull market, everybody believes they're a genius. And they all say the same phrase. This time it's different. It's such a funny phrase that in the investment world, people make fun of it. They're mocked because it's never different. It's actually the same thing. Bubbles expand, but over time, they mathematically cannot continue. So here we have people making millions of dollars who would otherwise be working in a parking garage, and they are giving stock tips out and telling everybody, you gotta get into this, JDSU, this, all kinds of stuff. So I take my college scholarship money, put it in the market, and I very quickly lose half the money. And so what happens is I realize, oh my God, I'm not as smart as I thought. It's not easy to become a millionaire through investing in 2 weeks. And so here is where there was a pivotal moment. One, I could have doubled down and said, I just picked the wrong stock. Let me pick another stock. This is very similar to what you hear with people in the crypto world. Well, my investment, quote, investment dropped 50%, but I gotta do this coin or that coin, etc. What I chose to do is go a different route and say, you know what? I don't think I'm that smart about investing. And I actually want to learn how fundamental basic investing works. So things like low cost, long term, things like reading about John Bogle's philosophy, etc. And I started to learn about it. And I realized you could spend your entire life trying to trade, but traders hardly ever make money over the long. So I'm gonna create this narrative that, this stock, look at the trading, look at the chart, and I'm gonna try to make quick money in 4 weeks. Everybody now knows somebody who trades. Those people almost all lose money. You'll notice they're your best friend when they're making tons of money. Hey bro, I made 600% in this stock. When it goes down, you don't really hear from them, okay? That's called survivorship bias. Those people simply disappear, but they're really loud when they're making money. And you learn that mathematically, even top Wall Street investors, over 80% of them don't even beat the market. What does that mean? It means that you watching this show right now can pick a simple Vanguard fund and you can beat over 80% of these fancy Wall Street suits. These guys were paid over $1 million a year. This stuff is really hard to believe. It's really hard to believe because it's counterintuitive, like 1% fees can be 28% out the door. People also don't understand compound growth. So for example, a lot of people right now are really dissatisfied. Hey, I don't have enough money. I'm not gonna ever be able to afford a house. And so therefore, I'm gonna have to invest in these high risk investments that are pure speculation. What's really happening there is they don't understand how compound interest works in 1 year than the last 20 years combined. If you plug in your numbers to a compound interest calculator, you can predict essentially down to the month and year when you will become a millionaire. That's simple, boring. So a lot of people watching this going, oh, this old guy, this Luddite, I prefer crypto, it's really exciting. Listen, investing is not about excitement. You want excitement, get a dog, watch a TNT drama. Investing is boring. It's like watching concrete dry, and it should be. The real fun is what you do with your money, how you live a rich life. If you bring anyone on the show who tells you what's gonna happen in the stock market, they're an idiot and or they're lying. So I'm not gonna do that. Nobody knows. And you'll find this in politics and money. A lot of people want to be comforted by essentially a parental figure, somebody who comes in here and tells you it's all gonna be okay. Or conversely, it's all going to shit. And they prey on people's weaknesses as to what's going on. The best investors are humble. They know that nobody knows anything. What do we know? We know that over time, the market continues to return approximately 7 to 8%, and that's over 100 plus years. We know that there are always people on Reddit and Twitter who've got these fanciful narrations of what's going on in the world, and they all disappear once the narrative is proved incorrect. So people have been talking about inflation forever. This is very low inflation. And in fact, even the recent inflation numbers are, I think over 30% of it is due to used car prices, okay? If you try to peg your investments to macroeconomics, you will be potentially losing out on lots of it. For the person who's in the wealth accumulation phase, right? They have a job, they want to make some more money, great. The best strategy for them is low cost, long-term investing. Take some percentage, I'd recommend at least 10, preferably 20% of your gross income. I'm gonna automatically contribute 10, 15, 20%, whatever they can do aggressively. And at first it seems really boring. Oh, I'm putting like $100 a month or $1,000 a month. That's not that much. But what they forget is that not only do you keep adding that, but over time the market tends to go up. And we know what happens. So your money isn't just doubling every 10 years, it's actually much faster than that because you're contributing more. And suddenly they wake up and they go, oh my God, that's a lot of money. And in 3 years, I'm gonna have more money from that than I get from my job. Wow, now you have some serious opportunity. You can choose whether to work there, start a business, go part-time. So the thing that I really like for simple investments is called a target date fund. If you're 35, you know that you can just assume you're gonna retire at 65. You might retire earlier or later, but just assume. And so you would pick a Vanguard fund, like a 2050 fund. What is that? Imagine you have a pie chart. In that pie chart, you have basically two different kinds of investments: equities or stocks and fixed income or bonds. Equities are more aggressive, they tend to outperform bonds. What a target date fund does is you just pick one fund, that's it, just one, put all your money in there and it automatically reallocates. They say, I'm gonna put you in the Vanguard 2050 fund.
So it's
2050 means you're gonna retire in 2050. In your investment portfolio, if you just have Tesla, you might feel really good. You might say, hey, Ramit, nice investment strategy, but my investment's up 400%. Cool, I'm glad. But over time, that cannot sustain itself. And so when that goes down, you want to have other investments that are going up and diversify. And again, yes, you may lose out on a little bit of gains. Like if you had picked Apple or Amazon, that would have been nice. But you have to remember, most people don't pick Apple. They don't pick Amazon. Called mom and pop investors. That's an insult. Ma and pa are the dumb money. The dumb money are random retail investors who are sitting in their basement using E-Trade or Robinhood. The sophisticated people are on Wall Street, and even they can't pick the winners more than 20% of the time. So a target date fund automatically diversifies internationally.